Hello, everyone. Welcome to another live analysis with HFM. Today, we're going to focus obviously on the central banks once again. We have ECB today. Yesterday, we have Bank of Canada and FOMC. So in general, we're gonna see what is expected to happen, but also we're gonna do a quick overview of what happened so far from the central banks. So I'm gonna quickly share my screen as well with the euro dollar, and let me also have the calendar in place just to for us to be able to quickly jump into the calendar once. Sorry. Once we have the rate decision out, which is not expected, which is basically expected to ease further. So we are seeing another easing from the ECB, from Ms. Lagarde, for the policy rates in general, both the operational rate and the deposit rate. This is expected to be about 25 points. So in the meantime, I'm sharing my screen. This is sorry, I was supposed to share euro dollar, but I'm not pound. That was pound earlier. So here is the 30 minutes chart for euro dollar. You can see that we had some kind of a fluctuation, consolidation between 103.80 territory and the 104 104.30 level. So the last time since yesterday, pretty much. But until everyone joins, I can see people still coming coming in the joining the live. I would like to do a quick briefing. We have 15 minutes to go until the announcement. So what we are facing so far today is pretty much a pretty mixed dollar, okay, at least in the European trade session so far. I have here it is. This is the 30 minutes chart. You can see that this pretty much, sorry, you can see that it's pretty much sideways within the high 107 territory. By saying high 107 territory, I'm referring to 107.60 to 107.90 level, a pretty mixed performance. Anyway, the performance has been seen mixed and sideways since Monday. So if I have to just check the daily chart, you're gonna see that the last 3 days, how many are following, the last 3 days, we have seen that the um, that dollar is firm, small body candles, so indecision, so pretty mixed. As I was saying, uh, they are all pretty mixed this morning. Okay, Fed is out of the way, but the market are still digesting the Fed, even though it looked a bit more of a non-event than an actual event, which is so bizarre uh, from the Fed. But anyway, was were expected for the rate to change once again. So what happened yesterday? I'm sure that you're already all of you are aware, but very briefly, just to cover everything, or as much as we can at least, is that there were no surprises, unchanged policy from the Fed. But the key is the fact that there wasn't any signal coming out from the conference. So we didn't have any hint of what's next from the Fed. So that's why that kept a bit the markets sideways, let's say. So there wasn't really much to really criticize, scrutinize. So yeah, that is what was basically kept the trading mostly from one hand marginally high, but overall a bit steady. Sorry. Now because we have another So I'm gonna stick on US for a bit. So, uh, as I said, nothing surprising. The only thing that was quite important from yesterday's session and had a direct impact into the market, it was uh, the comment for cryptos. So that was, if you're following cryptos, if you're like, I don't know whether you're a crypto trader, but nonetheless, if you're following the crypto news, you might have seen that the comment from Mr. Powell, basically that it wasn't basically against crypto. So he just highlighted that with an appropriate regulation, uh, they can be used by investors. And actually, his comments uh, were quite not a surprise, but it's not usual to see from Mr. Powell any comments regarding cryptos, to be honest. So, yeah, that's what we have seen Bitcoin and in general Ethereum, Solana, in general the cryptocurrency market to find some support in search. That's why we have seen uh, Bitcoin back to 105 level. So yeah, something quite unusual from Mr. Powell, and a big parallel with Mr. Trump. Not quite, but not in a disagreement at least. Yeah, so yeah, as I said, was saying it found some support from the press conference yesterday, and that was what was actually uh, what supported and boost further crypto market. To be more precise, he confirmed yesterday that banks can serve crypto clients with the proper risk management. And that was quite key. The other thing that was quite key is the fact that he emphasized openness to the financial innovation. And with better crypto regulation, he believes that it can be useful. So we don't usually see from the Federal Reserve chairman, of course. So that gave a boost to um, uh, crypto market, and you can see clearly that we had this rally, which is okay. It hasn't been extended yet, but we can see Bitcoin still sideways. You are asking about dollar yen. I'm gonna jump right now into it. We have a few more minutes before the ECB decision. It's a very interesting cross. Actually, no, allow me, Omer. I cannot what to do. I can tell you what I can technically analyze the asset, um, for you and the rent. So, but is one of the most interesting crosses. That's why you are probably asked about it. It's one of the most interesting crosses today, and the reason for that is that obviously today, other than the ECB guys. Okay, we have the growth coming from US along with the jobless claims. And tomorrow morning we have yen. And since we haven't seen much basically from sorry, we haven't seen much from the Fed yesterday, and the dollar doesn't really have a significant reaction. Regardless of that, we can see that the yen is still gaining ground against the dollar. Okay, so as I'm not sure whether I mentioned it in the last live streaming, but fundamental support a stronger yen against dollar. Why? Remember that. What? what the central banks are doing affects the yields, right? So the wider the yield differentiation, the more the movement uh, the same direction for that particular asset currency cross that is being affected. So what that means? It means that from one side we have the FOMC that kept in rate unchanged, right? Without any clarity whether they're going to continue cutting rates. So they were a bit more optimistic, which this could actually we could see some weakness in the greenback. But overall, the Trump policy and inflation could keep it support. But on the other side, we have yen, which don't forget that the bank in for which the already high interest rates supporting the and even highlighted they might continue with another rate hike. Remember that rate hikes appreciate support the country's currency, right? So on, on the consider that the market is expecting another rate hike from the Bank of Japan. That's why we might see the yen continue to be driven more by the boost of risk of sentiment and falling treasury yields. Okay, so from a technical perspective, this decline that we have seen from this highs over here from one of 58 to up 59 territory might continue. It is crucial. 155 was a very important level that it was already broken. Okay, 155. And so that round number, 155 psychological level, was already broken. This is the daily chart. The 50-day moving average already broken as well, but we need a confirmed closure below it. Also, look at that. Moving average are pointing lower, Bollinger's expanding lower, momentum is changing into negative, even though we still need further confirmation. We need the signal turning below zero. And that SI is already below 50. What that means? It means that uh, if that continues on the downside, and if actually breaks the 154, and by saying break, I mean a confirmed breakout and a closure tonight to 155, then that could be an indication for further decline in the medium term picture. Okay, sorry. With the very first support level to be at the 100-day moving average. In the meantime, though, let's zoom into the 1 hour chart. As you can see, used to be, this is the 1 hour chart. It used to consolidate, but we had a nice decisive bearish candle breaking the immediate support. So this is a sign for another swing lower with the next support level down to 153.70. If I add my Fibonacci expansion as well on this latest swing, let me see if I said it properly or not. Sorry, that's the very last swing. Perfect. In line, 2 consecutive sessions lower. So already retesting the 154, and the very next one is another 30 pips lower with the momentum pretty negative. You can see stochastic in this 30 minutes chart, pointing further down, RSI the same, and MACD is negative. 2 minutes to go until the European rate decisions are out. So I'm going to jump back to the euro. Okay, everyone. I'm going to jump back to the euro. This is the euro, but in with high Kanashi candles. Like first to have a look over here, which we've seen a bit of a could rebound, but it looks a bit limited. Because obviously, the market participants waiting for the data. So, as I was saying, my dear friends, um, yeah, we're expecting another hike. The key is, as always, sorry, another cut, the hike. The only one that is hiking is Bank of Japan. So another cut. Obviously, the press conference is what matters the most. So it's where we're gonna see the major, the biggest volatility. But we are expecting that Ms. Lagarde will keep a profile, let's say, something similar with Powell. I mean, not committing to anything, not giving any signs for future action. So, yeah, this is what is expected. Any surprise from here, any hint, any signal whether we're gonna have another rate cut in March could be interpreted as as negative factor for euro, and in this case, we might see euro dollar moving lower if she say that they're gonna have another rate cut in March, okay? Or if he hints something like that. For the time being, as you can see, this is the 30 minutes chart euro dollar. You can see that the asset just right now the decision is out. Let me check. As expected, 275, 290, the cut rate. The press conference is in 30 minutes from now. Um, so let's zoom in to see very limited performance. I put the 15 minutes chart. Yeah, it seems that there is no reaction yet. Okay, that's quite logical because we have the GDP coming out in 15 minutes, the US GDP, the US growth. Okay, and we have the press conference in 30 minutes. So because the result was as expected, it's reasonable that the markets are a bit more cautious. But I don't know how many of you are scalpers or not. We have seen this bullish cross in the 15 minutes chart earlier. So the ceiling in this very, very short time frame, the resistance, let's say, it's on the list, the latest swing high over here. So 104.11. Keep an eye. Just showing how do you get signals. Glenn, I haven't missed your question. I've seen it earlier, but I didn't have the chance to reply. I'm not allowed to give signals due to the regulator. We have, though, a signal service, which is the auto chartis service. So, if I'm not mistaken, there is no requirement. I mean, no, obviously, we don't charge it. It's for free for our clients. So, check your HFM area and you will be enabled to get auto chart these emails and signals. Okay, is a service based on based basically identifies patterns, analyze the momentum, and provides signals based on technical analysis. So keep an eye on this service if it's something that interests you. But I'm not allowed to give you any signals. What I'm allowed to do, and I'm trying my best to help, is analyze together the markets, momentum, see the technical analysis, fundamental analysis, even per asset, per time frame, and then you can make your own decision because each one of you trades differently, has different strategy, different plan, different goals. Uh, um, uh, so yeah, this is what I'm allowed to do. I will try today. So as we have seen, a bit sideways so far. So in 15 minutes, that the US growth will be out. we might have a clearer picture regarding the dollar. I should have done basically the live press conference. I will consider it next time. It was my bad. Because this is where the most volatility has been, I mean, we have the major volatility. So I'm gonna get back to MERS. Okay, no, actually to Balak first because mm, you're asking about DAX, my dear friend. So here it is. Oops, sorry, 30 minutes chart. We have nice as you can see overall rally um, index, and it has during the European European session this morning, it reached the top of the Bollingers and it came down the last 2 hours. Currently within the B zone, let's say, I have used two Bollinger Bands, okay, two different Bollingers, just to have immediate support and resistance levels. So you can see that the mid is the next support level. This is the second one, and this is the third one. And on the top, we have this is the very first resistance level. Even though it came a bit down, we can see that it found some support, okay? However, what I can see is that the Bollinger Bands, sorry, that the moving average have flattened. So that's a sign of a consolidation, but this is a 30 minutes chart. So what you are asking, 50, 750 is quite close with to the second support level. I don't know what kind of time frame you're trading, dear Barak. What was you put up? Okay, okay. So let me set my intraday setup just to cover everything about, just to have an overall picture of Nasdaq, of DAX. Sorry, my bad, of DAX. So that's the 1 hour chart. It's really, here we go, 121. Let me be precise. 121.50. Okay, perfect. So momentum is still strong. Stochastic, my very short time frame stochastic pulled back a bit. RSI at 70, very, very strong and consolidating at 70, not at 70. So there's no indication of a pullback, neither a boost. So I'm going to go zoom down to 30 just to see what's going on. Again, MACD flattened after positive, stochastic pointing uh, lower. RSI though is still strong. So, my dear Balak, considering strictly the intraday picture, so you're with a different broker, my dear friend. Okay, I see. Um, okay. Anyway, this is a free session for everyone, so it's not for only for our clients. So I'm gonna anyway analyze it for you. So as I was saying, from a technical perspective, a very short time frame, 30 and 1 hour time frame, we can see that momentum is still strong. So this pullback, it looks that it ran out of steam. The overall picture for DAX remains to the upside and is positive. So that looks to be just a correction before another attempt to the upside. I would like to see though also my DAX with my favorite high cash candles, 30 minutes again. So you can see still that even though there was a lot of consolidation, we had some bearish candles, but not like strong with tails at the top, presenting indecision, failing to extend lower. So you see these tiny tails, they are all in line. So what about plus the parabolics are below the price. So everything suggests that the um, the bulls are in control of the asset, or they at least hold DAX higher. That this was a limited move. Only if you see a break of just I have 21,763 here. Let me double check with the just a second, Balak. I've used Haikenashi right now. Oops. Yeah. So an even better one. Basically, this can you see this area over here is the 100% Fibonacci, and here is the latest swing. So only a break of this territory over here um, could could confirm a pullback. But even if that happened, you can see that this is still a strong, sorry, a strong, a strong channel. So you can either use the latest swing low or the bottom of the channel to basically to be your immediate trigger point. So only a break, what I'm trying to say is that only a break outside this channel or below this one, let me just find the exact level, dear friend, 21,760 to confirm that further swing lower down to 21,700, 21,665, and so on and so forth in a very short time frame. Okay, gold, the one only gold, right? By the way, dollar yen, indeed the break had happened, my dear Omer. Thank God I managed to cover it a bit at least before the release, but we are on the third consecutive candle in this 30 minutes chart, and this one is about to close in 3 minutes. Momentum is negative, stochastic keeps moving lower, so in the very short term, it seems that the yen continues further down. The same comes in the 4-hour chart, immediate support at 153.70, while in the daily picture, a break 153.70 could open the doors to 152.70, another 100 pips lower. So I'm going to jump back to gold, to Wizard. By the way, I would like to hear your opinions. Many of you are well experienced or even intermediate traders in general. Some of you are experienced. So if you think that you disagree with something with me, let me know because I like the interaction. I like to hear your point of view. I think it's useful and enlightful for everyone, all the participants as well. So, gold, my dear friends, and very question from market leader. Uh, the fundamentals support gold, okay? But so do the technicals. You mentioned 2790. So, yeah, yes. Actually, I'm gonna keep it because I want to show you something. I'm gonna just get rid of the channel. Uh, yeah, so here's the daily picture. Nice clear trend. I don't think that there is anything that I should explain over here. Well supported by my 20. This is my 20. Sorry, this one. Come on. Nine. My nine exponential moving average. I just remember that I needed a very tight one. Well supported on the upside the whole January. We had a bit of a consolidation sideways move the last 3 days, but today it tried to reach once again the record highs. So if I zoom out a bit, let's put some lines on the record highs. Record highs pretty much at 27.8948. I'm gonna round it. I'm gonna make it a round number, so it's the 27.90, the one that Wizard mentioned. 27.90. Okay, here we are. So what you can, so if I even just, sorry for that, I'd like to add MACD as well, also to add my RSI, just to give you an overall, just to cover everything or as much as we can for you. Okay, here we are. Look at that rally, right? It's a clear in a rally for the whole January. Momentum is rising, so bulls, more and more bulls entering the market. RSI the same. So overall, gold remains, sorry, on the upside. Why? Why? Technicals are being affected by fundamentals, as you might already know. Even though we are seeing basically rate cuts, right, easing from central banks, is something that is positive for the for gold because the higher the interest rates, the lower the dollar. Sorry, the lower the interest rates, the weaker the dollar, the stronger the gold. But also remember that we have now Mr. Trump in administration. And Mr. Trump's agenda, his policy, his actions so far are adding to inflation, to further inflationary pressure. What that means? It means that its policy might keep inflation higher. You can tell me why that affects positively the gold. It does, because remember that gold is being used by market participants as a way for hedging inflation, right? So fundamentals support the gold for 2025, or at least in the very first half of the year. Now, let's take it down to the technicals. As you can see, momentum looks still strong. There was a bit of a consolidation, but we have today the very first bullish candle after the 4 days, high candle without any tail at the bottom, indicating that um, uh, bulls are back in control. But obviously, the day needs to close in order to see whether that candle indeed will remain without any tail at the bottom. So, so yeah, the momentum looks strong, and it looks that the 2790 could break. So, and remember that a lot of pending orders are below, are like hidden at 2790. A lot of traders, they have probably had some pending orders in case that 2790 is being triggered. So that could boost even more the gold. Now let's shift lower to the 4 hour or 1 hour chart. Up to you, it doesn't really matter. So you can see that nice, keeps rising. Okay, the candles are getting a bit smaller, but still there is no indication of a consolidation like it was here. There is no pullback, there is nothing. It's still rising. So even if I choose, let me just add also my parabolic SAR and parabolic star. Sorry, give me a second. Uh, Here we are. Put my fractals as well. Parabolic star remain below the asset. They're getting closer intraday. This is the 1 hour chart. They're getting a bit closer with the price. So that means intraday we might see a bit of a, a bit of a consolidation, a bit of a pause, but it doesn't mean that is nothing. I mean, it's clear, keeps rising. So there's really there's not much to be said over here. Strong rally, a break of 27.90 could open the doors to. Let's use this latest swing for in for short-term traders. A break of 27.90 could open the doors to 28 and 28.26 level. For medium-term traders, something like that could open the doors to. Let me just would like also to use another one of these here. Perfect. So break of 27 and just 27.90 could open the doors to, as I said, 2800, round number, 28.26 territory. And if indeed those two immediate levels break, then the next level would be the 2900s. But that's for medium-term traders. For anyone that is an intraday trader or day trader, yeah, that would be significant because, as I said, it will open the doors to 2800, 28, 26 level. So hopefully I managed to cover your question, dear market wizards. So the GDP is out of the way as well. Sorry, just jump into dollar. So where's my dollar? Sorry, just second. Okay, here is the dollar. So this is a 15 minutes chart in the dollar. The data are out, the GDP data. We can see that jobless claim growth by 207,000. The gross domestic product for the last quarter of the year, it detected basically it rose up to 2.2%, but missed expectations. Yeah, it missed expectations. Right, this question. So I'm gonna jump back so you can see that some support from the data, but let me get back to the euro dollar. So it seems that on the announcement, sorry, just a second. There was a lot of indecision over here. It broke in the 104 that I mentioned earlier, and it was nearly, yeah, okay. Let me just check the GDP, the growth of US economy. So just a second, guys. Sorry. Like also yen who keeps moving lower. Yeah, keeps moving lower. That's nice. Okay, so we have over here significant growth in US initial jobless claims. That means in new claims, jobless claims this week, 207 is a big number. The US GDP higher but missing expectations. So the important is the US job today. So it was expected at 2.5. Let me just check a bit the breakdown of it, just to summarize. Um, uh, Basically, remember that the GDP is pretty good indicator for of where the market is now priced. Um, so it seems that it has catch many people off guard because has missed. So the fact that we have less growth in the U.S. economy, of what was expected, that seems that it's adding further to dollar weakness, initially at least. But it's adding more to the safe havens. Let me just, because it's a bit of a mess up over here right now. Gold, if I put the 15 minutes chart just to see how the market performed, even there it is. This is an indecisive candle in gold. In dollar yen, 15 minutes chart, also an undecisive candle. If I shift to the dollar, 15 minutes chart, there was a boost higher, but the sellers pushing pushing the price back down to the open price, which is okay. So these are not really good news for the dollar, it seems. Um, yeah. Either way, this is not enough to suggest suggest anything for the Fed. I mean, just even though the GDP growth it missed expectations, so it doesn't really satisfy. It doesn't really give any clue to the Fed whether they should continue keep the policy unchanged or whether they should next time they should cut. So that's why the focus will probably be on the NFP and PCE, as it has been the case the last 2 months anyway. So GDP hasn't given any significant sign to uh, to the to the markets so far. You see this line. This is the 15 minutes chart in dollar. So there's a lot of debate over here, but I can see that the sellers managed to pull back significantly. I mean, the bulls managed to bring dollar to 107, about 107.80, but now it's back down. Obviously, we have another 2 minutes to go, and this until this 15 candle close, but the data have not been positive for the the dollar, and I suspect that the safety of gold and the safety of dollar yen might uh, attract more buyers on due to this uncertainty. But we need to confirm this with some candles as well. So let me just, yeah, momentum is lower. Let's wait and see. But definitely a lot of debate. It's another minute to go. Um, yeah. So what else? Guys, by the way, this is your session, so let me know if you have any questions because I'm ready to click the date. Um, I'm gonna okay that close well below the mid of this candle. So yeah, that doesn't change the view that dollar is under pressure so far today. So yeah, that doesn't really change anything because it's close well below the level. Momentum is still weak. The asset is trading below all moving averages. Yeah, so just the high Kanashi candles as well, but it's not changing anything. You see in the high Kanashi, you will still get some bearish candles. So yeah, dollar remains under pressure today. Uh, since we have soon the euro dollar, it keeps rising because of the dollar weakness, obviously, and ahead of Ms. Lagarde. So next resistance levels, uh, basically you can use. This is a very strong, nice resistance level today for the euro dollar, the 104.30 level, 1, 2, 3, 4, 5 consecutive fractals, nice resistance level. RSI rose higher. This is the 15 minutes chart, guys. Okay, this is the 15 minutes chart. So you see either same. Let me just, yeah. I have put on the resistance levels for you to be aware, but the 104.30 is the very next significant resistance level. We have another bullish cross in the 30 chart from euro dollar. Uh, so yeah, a break of 104.30 could open the doors to another 15 pips higher. Let me all check my high Kinashi. Nice as well. Bullish candles, parabolic SAR below the price, another bullish sign. This is the 15 minutes chart since we're gonna have Ms. Lagarde out soon. So we are noting at the bottom strong. So still suggests that there is further rally in the very short time frame. So guys, this is pretty much it. I'm gonna call it a day because it's been already uh, 40 minutes. 40, yeah, 58 minutes so far. So enjoy, take care. Great diamond shortening in the euro dollar. Depends there which time frame. What's your outlook? What's your goal? Have you opened a short position because you are a day trader? You are a medium trader, and you are following, let's say, this overall trend, or you have seen this reversal in the day chart. Doesn't matter. What I have analyzed is the 30 and 15 minutes chart. So obviously, if you're shortening it, that means that you are not going against the overall long and medium term trend. So yeah, like it depends from you, from your strategy and your goal, your plan, which time frame you're trading. So yeah, but intraday there is some bullish bias indeed. But as I said, this is a very strong resistance level because it has been repeated several times since yesterday. It tested several times. A break of it could turn attention further higher to another 15 pips higher. So basically the 104.45 level. So but that's for the very short intraday time frame, let's say. Yeah. Yeah, guys, this is pretty much it. Thank you very much. Have a great day ahead. Take care. Keep an eye on Miss Lagarde comments and see you again next time. Enjoy. Take care. Bye bye.